Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo artisans. Welcome to the weekly market forecast. We're going to take a look today at Bitcoin, Solana, UR, USD, GBP, USD, USD, JPY, GBP, JPY, SP 500 futures, Dow futures, NASDAQ futures, gold, and silver. And before we jump into that, we're going to take a look at the data that's coming out this week. So here we are looking at Forex Factory at the economic data that's going to be announced this week. And not a lot on Monday. You've got the S&B Swiss National Bank, Chairman Schlegel speaks. Tuesday, probably going to see a bit of a slowdown in a lot of markets, especially U.S. markets, because Wednesday is the FOMC. So a little bit of possible volatility Tuesday morning at 10 AM EST, CB consumer confidence. Australia is going to talk about their CPI quarter over quarter, year over year. So trend in the Aussie might get pretty volatile at 7:30 p.m.-ish EST. Wednesday, I do expect the markets to slow down. You have Bank of England Governor Bailey speaking. You have Bank of Canada monetary policy and rates. You have their overnight rate. You've got U.S. FOMC. So I think Wednesday is probably just a good day for me to take a break. Might even not do a show that day. We'll see about it. And after that's done, there probably will be some volatility. And I bet that Thursday will be a decent day to trade. We do have some data coming out pretty early, 8:30 a.m. EST is the GDP data quarter over quarter for the U.S., along with unemployment data that comes out every week. And the Euro also has their data coming out at 7:15 a.m. EST. So I think once the Euro is done, first minute or two, the market stops being so crazy. Might be a great morning to trade. They do have their press conference coming out at 8:45 a.m. EST, so I might hang back until that's done, at least trading the euro, because the market might move while they're talking, And then the CPI is coming out for Germany. That's an all-day event, so that might make trading the euro just kind of out of the question on Thursday. We'll see about it. I mean, if it's a far enough number away from what the estimate is, that could make the whole market untradeable, so Thursday is a bit of a landmine day as well. Friday, all that is more or less done. There is some data coming out 8:30 a.m., which is actually undercover important. A lot of people are always watching CPI, but the PCE price index is actually what I believe the Fed looks at for their numbers for the following month. So the core PCE coming out at 8:30 a.m. EST might surprise you a little bit, so I'd be real careful trading in the morning until at least 10 minutes after that's done, and some Canada GDP data coming out. So let's jump into the charts. Nasty market open. I know you're seeing lots of crazy arrows. This chart looks crazy. How do you even try to trade anything like this? Why is my forecast looking so crazy? It's because that dotted line right there is Wednesday. And we had a bit of an unexpectedly weak open on the indices, which is why the arrow is pointing to that big red candle on Bitcoin right now. I do expect it to hopefully catch its support. I mean, if it doesn't, I can trade that too. It just seems like it'll catch its support, maintain above 100,000, if not above 102 for the time being. Now, it could push down even further. I think a lot of it's going to depend on how the markets open. There has been talk about that markets might not do so well in that world. At the same time, he's talking about cutting rates. We're getting a lot of mixed signals from the Trump administration right now. And while the Fed is independent and doesn't have to do what Trump says, at the same time, the president and his can exert a lot of influence. So it seems like the market's a little bit, let's use the term schizophrenic right now. For the moment, the price is holding on Bitcoin above 102. I expect it to more or less go sideways the next few days. But remember, there's a lot of surprises. There's a lot of data coming out. I expect overall sideways action. So selling the tops here, resistances up here around 107, supports around 101 or 100. That might be a good way to go if you have algos backing you up. For the moment though, market's either going to bounce temporarily, probably up to 104 over the next several hours, or it might dip down towards 100,000, and we're going to see what happens with that, probably based on how the equities indices perform. So once Wednesday hits, all bets are off, which is why I have that dotted line and no solid lines. After that, I do expect sideways action in the absence of any surprises. Let's take a look at Solana. Solana experienced that same hard open, and you can see that price actually is heading down towards a local support area of 242. Now, as it stands right now, it's holding, but I wouldn't be surprised to see Solana go down and retest this 230 here in the next few hours. It might come up after that. Again, a lot of that's going to depend on how the equities indices open, how the rest of the market functions. I don't really trade triangles per se, but I like to map them out because they tell us about what's going on with volatility a lot of the time, and when price starts starts to kind of condense into one small area, there's going to be a bigger move usually, and we do see that big move happening as it stands right as this market open. Price may continue down. It really could actually break a little further down. And it, again, depends on how the indices do, how they open, but a move down towards like 210, 220, not out of the question. Seems as if for now Trump is done releasing coins. That's a lot of the reason that Solana made its way up to its all-time highs, because people were buying Solana to buy the Trump coin. Trump coin has really retraced quite a lot, and it's a meme coin, and that's just what they do. Not to say it won't come back up later, but right now it's down, I think, like 70%, and it's pretty typical after a new launch of anything, whether it's a meme coin or not. So now that that's calmed down, Solana's calming down, and the bag holders are starting to sell, and we're starting to see that along with the weak indices open, pushing price down, pushing Bitcoin down, and therefore pushing Solana down. So let's move out of crypto into Forex. We'll take a look at EUR-USD. Okay, so here's EUR-USD, and I do expect to see a little more bullishness over the next several days. Again, all bets are off after FOMC. Anything can happen. What we might see is price wanting to head up to this 105.68 area. And this is important because it's a Fibonacci level on a much, much, much larger impulse down. That big impulse down, you see this 618 and you see this 382. And that 382 might be where the euro goes up to at least grab some liquidity, and it might continue to stay up there. Now, what it does after that is hard to say. And it'll be good to take a look at the euro from a higher time frame just to conceptualize why price is doing what it did, because as you can see, my prior week estimates, will go back to the lower time frame in a second. My prior week did not turn out as planned. Now, of course, I was able to pivot midweek. I didn't lose any money trading. I just draw those estimates so I can tell which way the wind is blowing. But you can see there's been a massive move down here, and I can delete some of this data to make it look a little more clean. But price tends to want to head back up and either grab a 382 or a 618, and those two are Fibonacci areas, and there is volume to go along with that. So we might see price go up to that same area I just mentioned, about 105.73. It might float around there, and what it does at that level and what the algos do as it hangs out there over the next days or weeks will tell us a lot about what's going to go on with the rest of the market. If we do expect to see a dollar strong situation, you might see the euro start to lose its bullishness against the dollar, and price heads back down as I originally thought it would by the way I drew last week's estimates. I expected sideways at least, and it finally popped up. Not totally unexpected after a few weeks of heading down like that in a very precipitous manner. So for the moment, I expect sideways to up, and we're going to see what happens after Wednesday. Let's take a look at the cable, aka GBP-USD. Similar look, I do expect right now a pullback because of that market open, dollar getting comparatively strong, money leaving stocks and indices to go into the dollar, pushing the dollar up, therefore pushing the pound down against it, but that might not last. It might not go as low as I drew here, but I do think we're going to see a little retracement. It could only go just a little bit. It could only go a little bit down and then start to continue up. I'm just going to keep it right where it is, right where I had it, because I do think that's a reasonable place for price to go down, grab liquidity in this prior consolidation, and then perhaps head up after that. Now, again, a lot can change. A lot of data is coming out. You have Governor Bailey talking on Wednesday. This could totally throw everything off, but for the moment, I do expect the pound to be a bit bullish right now, just based on the metrics, on the algos, and then we're going to see what happens as the week unfolds. Remember, these are not items that I trade on per se. I just use these to know which way the wind is blowing, and as you can tell, I thought we would see further down, and price actually went ahead and reversed back upwards the same way that it did with the euro. Let's look at the USD JPY. Okay, so I've been pretty accurate with USD JPY, although the dollar became a little bit stronger than expected, or JPY became a little weaker than expected because this did not go down any further. I thought it would. I've been calling this really accurately the last few weeks, but here we are with a pretty long consolidation going back to 15 January. So I do expect price, at least I did expect it to head up a little bit. It looks like, again, we're seeing a little bit of a weak open, and understand the way that the Japanese yen works in the world economy with the stock market. The Japanese yen tends to be a place where things go when stocks go down, just like the dollar, but even more so, because the Japanese yen has been used for decades now as a liquidity source for the market. So I'm going to go ahead and I'm going to redraw this estimate that I drew before the open here, because I do think we're going to see the yen test those lows. Now, whether or not it's able to come back up after that, that's going to depend again on the rest of the market. Are we seeing a scenario where stocks continue to fall, right? If that's the case, we might see the dollar versus the yen head down, pop up a little bit, and then maybe continue to head down. If the market kind of recovers, the plunge protection team comes in, which it can really do at any minute, And then, of course, the Japanese yen will get weaker. Money will flow out of the yen, back into the market, and this should reverse course. So, again, I'm not using these items to trade. These are just estimates. And really, this week, a lot of anything can happen. We're in that world right now. It is FOMC week, and the plunge protection team has no greater power than CPI week or FOMC week. Those are the two times when the plunge protection team really doesn't have to use quite as much money because they can rely on news and narrative. Let's go look at the beast, GBP, JPY. New kid on the block, GBP, JPY, just started tracking it a week or two ago for this show. And again, I thought this would head down. JPY ended up getting weaker than expected, and the pound was strong, so we saw price head up. And this white lines here, these white lines are my pivot that I drew partway through the week last week. Price really did follow that very accurately. I did this pivot, these drawings live for everybody to see, and now I think price is going to hang out, maybe head up, maybe not. It might just go sideways right now. Again, you have Governor Bailey talking on Wednesday of the GBP. You have JPY doing a priced in expected hike of 25 basis points last week, so I think markets might remain calm. Might be a good time to trade the chop. Now, the beast, as they call it, GBP JPY, is very volatile, so we might see price not go sideways for too long, but it's only a couple days till Wednesday, and I think the markets are going to remain calm until then. Let's take a look at SP 500 futures. So here's that nasty open down. Price opened and gapped down on the futures market, meaning that as the market opened for the futures, which futures market opens like maybe an hour or two ago, price gapped down. Everything sold off very hard. So I do think we're going to see price retrace to this local liquidity, right? You have a decent amount of liquidity in this area, especially down at these recent local highs of about 60.75. So I think price might come down, dip, grab liquidity, head sideways, and as the week opens up, we have to find out whether or not the plunge protection team wants to take action on Monday, Tuesday, Wednesday, all or none of the above, or some of the above. We're going to see as that happens. I usually wait for things to happen with the indices and for bottoms to get caught. I don't like shorting these. I've seen it too many times where the market gets held up by the plunge protection team and the shorts just get blown out of the water. And with Wednesday coming, I don't trade these anyway. Usually I do have the capability to. I'm looking for some better places to trade the SP 500, etc. But I'll probably leave this alone for the moment, outside of some scalps. To draw it out for the rest of the week, I expect sideways, maybe slightly up, but they might let it fall too. Price could continue down. I don't expect it to do that. It's less likely scenario, but if price did decide to head down, it probably would try to grab some liquidity in what is kind of a little bit of a messier consolidation area. Price could dip a little bit lower into those areas. I don't expect it to, but market does things we don't expect quite often, so we could see a move down in that direction, more or less. Might not be exactly when I drew that arrow, might be the week after, but we'll see what happens. Let's take a look at the Dow futures. Similar situation here. I expect the Dow to head down. It doesn't look quite as bullish as SP 500, but that's short term. That could change. So I'm just expecting sideways action with a little bit of bearish pressure. And of course, you have all the millions of different things it could do, as these dotted arrows are, because of what's going on this week, all the different things happening this week. All bets are off as of FOMC Wednesday, which is why I've got this line here so clearly demarcated. But let's move on to NASDAQ. Similar look, sideways to bearish action for the moment unless plunge protection team comes in. All bets are off until Wednesday. Let's see how it goes. Gold looking overall bullish, but what you have when indices start to fall, people will get out of other positions so that they can cover whatever else they need to cover. So we're seeing a little sort of a dip in the gold open as well, probably related to either dollar strength and or the NASDAQ and everything else gapping down. In the meantime, I do expect gold to continue up in a very slow, methodical fashion for the moment, unless there is some kind of headline risk, geopolitical issues, whatever. So we'll see what happens. And of course, FOMC could really throw things off, although I think precious metals are a little bit less susceptible to those issues, but a strong enough surprise from the FOMC will throw all the markets into a tizzy. Of course, after Tuesday, all bets are off, but I might not mind trading gold. It's pretty stable to trade right now. Let's take a look at silver. Similar look, bearish open, probably going to bounce anywhere from $30.10 up to maybe $30.35. And then it'll probably either go sideways or slightly up, all bets off after Wednesday at this dotted line. Thanks for joining me again this week. I know that this is a difficult week to forecast. Again, I don't trade based on the forecast. I use them to know which way the wind is blowing as I draw out my trades. However, there are times when I'm scary accurate, and there's other times when the market just kind of surprises us with news and price veers off course, and this is the nature of trading. This is the X factor. And even if there is no news, even if there is no exogenous shocks to the market, sometimes trades just don't go your way. And it might be a million reasons, and it might be just pure randomness of the market. Either way, the goal is to be more right than wrong, and the goal is to also win more than one loses. This is what we're very good at over at Algo Factory. We're very good at showing people how to extract money from these markets in a methodical fashion, right? You're not going to win them all, but you're going to try to win most of them, and you're going to try to win more than you lose. In order to come do that, talk to us over at algofactory.tech. We hope to see you soon. Come on over, learn how to trade like a hedge fund pro, and we'll see you on the next video, Tuesday morning live, 8:30 AM EST. Have a nice weekend.